Thanks for tuning in to this edition of Business Daily. I'm Joon in Seoul. Before we get started, let's see what we have lined up for you this afternoon. It's no longer just a problem at home. China's stock plunge comes with global market carnage, wiping out billions of dollars from shares around the world. Following a landmark deal reached on Tuesday between the two Koreas, South Korea's business communities promised to step up efforts to expand economic ties with Pyongyang. Chinese stocks tumbled again on Tuesday after posting their biggest decline in 8 years the previous day, while Asian indices showed mixed results. China's benchmark Shanghai Composite in late trading dropped 6.75% as some Asian bourses continued to reflect market jitters lingering from Beijing's massive drop on Monday. Now, over in Japan, the Nikkei shed nearly 4%, hitting the lowest level in over 6 months due to worries about the strength of growth in China. Meanwhile, by lunchtime, Hong Kong's Hang Seng was up 1.6%, and Australia's S&P ASX 200 closed up 2.4%. With that, let's now get a quick check on how the markets fared here in Seoul today. Despite China's Black Monday, Seoul shares rebounded on this Tuesday, as a landmark agreement between the two Koreas spurred new hopes for the resumption of inter-Korean exchanges that had been stalled under strained ties. At the closing bell, the benchmark Kospi was up 0.92%, finishing the day at 1846.63, while the tech-heavy Kosdaq also surged by 5.23% to end at 645.43. The Korean won also rebounded on Tuesday from its 5-year low against the greenback on eased inter-Korean tensions, ending at 1,195.31. Meanwhile, a volatile Chinese stock market has pushed up Korea's credit default swap premium, or CDS premium, to the highest level in 2 years. According to market tracker Market, the CDS premium on Korea's 5-year Forex stabilization bonds rose 7 basis points to 79 basis points, the highest since 2013. The risk premiums of other emerging economies are also climbing. Deutsche Bank put China's risk premium at 116 basis points, the highest in 2 years, while Malaysia's hit 189 basis points, a fresh record since 2011. A higher number signals a greater risk of default for the country. Now, China sneezed big time on Monday, sending shockwaves across the global market in what seems to have become a Chinese contagion. Concerns are that Beijing's Black Monday sent shares not only in Asia, but also in more developed markets down the hill. So, how is this all going to affect Korean markets and its currency? We'll have more on that soon.
Mayhem unfolded across the globe after China's Shanghai Composite nosedived 8.5% on Monday in the biggest sell-off since 2007. This led to billions of dollars being wiped out from financial markets in Asia, the US and Europe. Stocks in Korea, Japan, Hong Kong and Australia all shed more than 2%, while the US market suffered the biggest sell-off in 4 years, with the Dow Jones having dropped more than 1,000 points within minutes of opening. London stocks also saw the greatest fall since 2009, and major markets in France and Germany slid by 5%. Although declines eased as the day progressed, the market plunge in China sent shivers across the globe about the health of the world's second-largest economy. Experts say aside from volatility in China, falling oil prices and uncertainty about when the US will raise its interest rate are also igniting the global sell-off.
And to tell us more about this, we're now joined by Professor Yang Jun-seok from the Catholic University of Korea. So good to see you, Professor.
Happy to be here.
All right, so during what many called one of the worst trading days for world markets, Chinese Shanghai Composite Index lost 8.5%, which is the largest margin in 8 years. Chinese shares have been on a seesaw ride for a while now, but why did the market plunge on Monday?
Okay, well, we have to start this from back in June when the fall first started. If you look at how the Chinese Shanghai market has changed over 2014 and 15, well, in June of 2014, the stock market was at 2,000 range, but at June of this year it was at 5,000 range. So it grew 150% in a year. No reasonable market does that. So in June, you can say that the bubble burst. And I think everybody expected the bubble to burst. But I think what happened is that brought fresh attention to problems in the Chinese economy. So now it's going beyond the bursting of the bubble, and we're looking at reconsideration of Chinese fundamentals. And I think people who were previously optimistic about Chinese future are now turning pessimistic, and that accounts for a lot of the market fluctuation.
And obviously, like we said before, the impact was felt throughout the world and even in more advanced markets like in the US and Europe.
Yeah, but I think the Chinese market fall was definitely a trigger. Not only on Monday, but on last Friday. But it's been taking place on the background where we had a lot of very bad economic news for a long time. The Japanese government announced that their economy contracted in the second quarter. The European Eurozone growth rate has been only 0.3%. This is a bit of an old news, but the global trade growth for the first quarter of this year was only 0.4%. So you had additional news, bad news on top of that. And then Fed has been worrying because they're worried whether the U.S. Growth is as strong as a lot of people think it is, because while the unemployment rate has been falling, the wage increase has not been taking place. So this is not typical of recoveries. So that has also created some bad vibes in the global markets, and the Chinese market fall has acted as a trigger.
All right, then let's look at the Korean stock market. I mean, Korean shares, like we said before, rebounded today on back of hopeful news that the two Koreas reached a landmark deal. But then considering that China is one of Korea's biggest trading partners, what kind of threats would this market plunge pose on the Korean economy?
Okay, well, it depends on how much of this Chinese market fall is due to real factors or how much of it is just bursting of the bubble.
Okay.
As for some people trying to say that it's not really, the real economy shouldn't be affected that much because the stock market in China forms a relatively small part of Chinese wealth. By some accounts, it forms about 7 to 14% of Chinese wealth. So even if the market plunges, it shouldn't affect that many people. But I think a lot more people think this will lead to real effects in the real economy because there has been a lot of debt in the Chinese economy. A lot of the growth in China has been driven by construction, and that seems to be a bubble situation there. A lot of financial institutions are now maybe stuck with bad debt. This may lead to a credit crunch, and if it does so, then that will lead to a big contraction in the Chinese economy. And since China accounts for 25% of Korea's exports, and they're the engine of growth for the East Asian area, and East Asian area accounts for another 15 to 20% of Korea's growth, if the Chinese engine fails, then the East Asian economy as a whole will be in a lot of trouble.
All right. Well, and what other ripple effects will this have on the global economy? I mean, we've already seen commodity prices falling as well as oil prices.
Yeah, and that's really depressing part of this is because the lower commodity prices and lower oil prices do not necessarily do not reflect higher productivity. They do not reflect more supply, but they reflect pessimism in the future. It seems that the demand is down because more and more people are believing that the growth this year and next year will be very low. So this is sort of a signal that the entire second half this year might not be very good.
All right. Well, we touched upon this with you last week a little bit about the looming economic crisis in September. Now with this China's Black Monday, should we be more worried about a looming crisis in September?
Yeah, a lot of difference 1 week make.
Yes.
At last week, I said that compared to the situation in 2013, compared to the so-called taper tantrum that we saw then, it seemed to be a lot more quiet this year, even though a lot of the scenarios are very pessimistic. Well, that assessment has to be changed, I think.
Okay.
I think within the last week, we just saw that with the CDS premium rise. Korea has risen by a bit, but other economies have been hit by larger increases. We are going through a very unstable moment right now. If this stabilizes, then fine. But if this becomes more and more destabilizing, then we're going to see a similar situation that we saw in a 2013 taper tantrum, and coupled with the pessimistic scenario for the real economy growth, it's going to be a very shaky year unless something turns around very soon.
I mean, some people were actually comparing this to the 2008 financial crisis. What's your opinion on that?
I don't think it's going to get that far unless a lot more problem comes out of China. I think the problem with 2008 was that everybody was caught completely by surprise by how bad things were in U.S. subprime market and then the European, especially Greek market. Right now, at least according to China, we think we know what the problems are. We haven't really focused on them in the past, so we've gone much more pessimistic on them, but they were known problems. But if this new situation brings out a lot more darker problems that China has been hiding, which is what a lot of people are afraid of because they think that Chinese growth is going to be even lower than what the Chinese government estimates, or if the credit crunch takes place, so basically the Chinese credit market becomes paralyzed, then I think there's a possibility of a situation like 2008. But let's not worry about it too much until we get there. Right now, with what we see, it's not going that far.
All right, then how should Korea's financial authorities prepare for possible future market crashes?
Okay, my fundamental advice hasn't really changed very much. Again, there's not much we can do about the outside world. So the best we can do is monitor. If capital flows going out of Korea is moderate, and if the exchange rate changes, fluctuations are moderate, then I think we should leave things as they are, but monitor very carefully. If they accelerate and the exchange, the won depreciates very quickly, or if the capital flow accelerates a lot more than it is now, then government may try to take emergency measures. But for now, we need to monitor it so that we could get a handle on the situation if it worsens. But let's not get too worried about it yet.
All right, so close monitoring is the key for now. Okay, thank you so much for that insight, Professor.
Thank you.
Concerns about the looming threat of military conflict on the Korean peninsula have been eased significantly as high-level talks between South and North Korea finally produced an understanding to de-escalate tensions and mend ties. And this is news that's being welcomed by the business community as well. Our Eunice Kim has the story.
Vehicles still came and went from South Korea to the joint Kaesong industrial complex in the north amid the escalating tensions, but hearts were racing. In the 2 a.m. hour on Tuesday, a breakthrough was announced in the frozen relations. Outlined in the agreement were 6 steps of action towards de-escalation, reached after more than 43 hours of marathon talks. Businesses heaved a collective sigh of relief and expressed hopes of more progress ahead.
With this landmark agreement, we hope it will lead to not only more exchanges between governments, but also between businesses.
South Korea's largest business lobby, the Federation of Korean Industry, said it would build upon existing plans, including one to eventually establish an office in Pyongyang. And then there are small and medium-sized businesses that have been directly impacted, those at the Kaesong industrial complex.
We hope that operations at the industrial park can be normalized again with these improved relations.
Firms collectively hope for a business environment that excludes the possibility of interruptions triggered by political differences. This as Hyundai Asan now faces the task of organizing separated family reunions by the Chuseok holiday next month, saying it will do its utmost to help improve South-North relations. Eunice Kim, Business Daily.
Korea's household credit recorded the fastest on-quarter growth since records were run in 2002, further adding to concerns about the country's already massive household debt. According to the Bank of Korea on Tuesday, outstanding household credit totaled a fresh record of $947 billion as of end June, up 9.1% on year. Household credit includes credit purchases and loans extended by financial institutions and commercial lenders. Since the BOK started lowering its key interest rate to prop up the sluggish economy, household borrowing has been on a steady rise as more Koreans take advantage of record low rates to buy homes, further pushing up debt levels. All right, that'll do it for now. We'll be back tomorrow at the same time, same place, so don't forget to tune in then. Thanks for watching, and goodbye for now.